Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
If you're interested in multifamily real estate but don't know how or where to begin, our guide on how to start investing in multifamily real estate breaks down everything you need to know about identifying good investments plus real-world examples. Download your copy in the show notes or visit lifebridgecapital.com/start now to start your journey in multifamily real estate. This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Lance Pederson. Thanks for being on the show, Lance.
Oh, thank you, Whitney. Happy to be on.
Yeah, happy to have you here. And Lance is the founder and managing partner of Veravest, an end-to-end middle market real estate investing platform designed to help passive investors connect with worthy real estate sponsors. He has served as a lead consultant and architect for over 180 real estate investment funds since 2012. That's quite impressive by itself, Lance. And so definitely a great guest to be on our show. I love thinking through. I mean, we work so hard personally on just, I call it the investor life cycle. You know, like every touch we have with investors, making sure it's just what's above what's expected, you know, in the most professional, you know, way we possibly can. And so we employ people just to focus on those things. And so I feel like Lance is a great guest to help us kind of see into those things, you know, from lots, because he sees this from lots of sponsors, works with many sponsors, many LPs. And, you know, as he said, even before the show, just helping you remove the friction between LPs and GPs. I love that thinking like that because we definitely don't want any friction there, right? We're helping one another move forward. So Lance, welcome to the show. Why don't you give us just a little insight or vision into the, you know, the last, or since 2012, what you've been working on and how you got up to Veravest.
Sure. Yeah. So Veravest was sort of an accidental business, if I'm being honest. So we, for us, we have a private equity real estate firm called Fairway America, and we decided to tilt up a open-ended sort of diversified fund, like basically a fund of funds, which allowed us to allocate into, you know, syndications, you know, other funds. And so we kind of went down that road. We learned quickly that the reporting standards and downstream from us, you know, those we were investing with weren't really up to snuff, which presented a problem because for us to do the financials at our fund level without, you know, information is impossible. And at the same time, we started our advisory and consulting practice around fund formation. So we were working with a lot of real estate entrepreneurs around the country who, you know, helping them structure their funds and, you know, launch these funds. Well, at the end of it, they're like, well, how do I administer this thing? And we're like, well, you know, this is how it works. And, you know, it quickly became one of those things where like, I don't know how to administer it. And none of the fund administrators are willing to take us on as clients because we're too small. So for us, we were kind of had that moment of truth where we were like, okay, we don't really want to start another business because we just kind of wanted to be fund managers and allocate capital. But at this point, we really have to solve the problem. So we took what was an internal department and made it an external facing division and started offering, you know, bookkeeping, accounting, and fund administration services to our clients. Well, one thing led to another, and that just took off. And in 2017, we spun it off as a separate company. So, and at that point we named it, you know, we took our company, our office was on Redwood Lane, and we basically, you know, this shows you how much thought we kind of put into it. Like it was more of a means to an end. So we're like, all right, what are we going to name this new fund administration company that, you know, has like a billion in assets under administration. So we're like, let's just call it Redwood Real Estate Administration. And we really never marketed it or anything, but just as time went on, we realized that it's a huge need in the market. And we ended up, around that same time, we kind of went all in with it and decided to develop our own investor management platform so that we could actually administer these complex vehicles, because the open-ended funds are just a different animal. And, you know, they're unitized, and you've got, you know, net asset value and, you know, really nothing on the market that would handle those sorts of complexities. So we went down that road, and And then last year we decided we rebranded Redwood. We kind of said, okay, this is a real business, and there's a real need in the market. We decided to rebrand it to Veravest. So that was in July. But I think, so really since that time, I think the common theme for us has been, my business partner, Matt Burke, and I in 2012 sort of decided to embark on this journey. We, like most people do, you say, well, what's your vision? And, what are you trying to do here? Right? Like there's got to be a bigger purpose and, for doing this other than making money. And I think for us, our whole thing was, well, if we can help create a flood of capital to worthy, real estate entrepreneurs around the country, that's what we want to do, right? Because we for ourselves, we were longtime debt fund managers. So we had run, 4 debt funds before we decided to sort of become more, private equity real estate guys. And that was the thing that always bothered us, right? Was that the good guys usually aren't the greatest marketers, right? And they don't have flash, and, they're understated, and and often they get overlooked. And so we just felt like there's a lot of really good operators and managers out there that no one has ever heard of. And we just feel like whatever we do from this day forward, let's do things to help them get access to capital more easily. And really that's sort of been our guiding light since then. And every decision we make is sort of against that. Like, will this help create a flood of capital to worthy real estate entrepreneurs? Yes or no? If no, then we don't do it. If yes, we'll contemplate it.
Nice. Well, no, it's so interesting. And I think that's how most entrepreneurs start businesses, right? They see a problem and it's like, okay, well, let's go see if we can fix this problem. And so many businesses are born that way. And thankfully yours, this was successful, sounds like. And so, but you all started a bookkeeping and accounting, right? Was that for say LPs or GPs or both?
For GPs. Yeah. So it was more, kind of your fund administration. So because we were debt fund managers, we ended up attracting a lot of debt fund clients. So we were administering quite a few debt funds, and debt funds, especially when you're lending to like, fix and flip guys, the loan balances are pretty small. So it's pretty tedious at the fund level to do all of the, tracking all the originations and the pay, loans pay off and advances are being made. And so really it's quite a bit of work. So you do it at that level. And then that's really graduated to just, doing all sorts of accounting related things. And then of course what we call investor servicing, but it's just the capital account maintenance, right? So you've got all these partners and these partnerships. You've got to keep track of, allocating income and expense, right, and depreciation, and the distributions are going out and the waterfall calculations. And
right.
So really that's at the heart of kind of what we had to do. So we've got a bunch of fund accountants who, that's what they're experts at. So
yeah, we have a few important things I want to ensure we get to during the show and discuss. But one other question on that. I mean, did you have a background in accounting or bookkeeping, or did you just find people that were experts in that space and hire them?
Yeah, it's a great question. So no, I don't, and we really didn't. My sort of superpower is just I learn really, really fast and can pick things up. And in accounting, when I started my first business, it was one of the things that became similarly, right? It became something that was an impediment to growth, right? And I had to learn what accrual accounting was about because I couldn't figure out with whether we were making money or losing money or whatever. So I became kind of a student of just accounting in general, mainly around, accruals and inventory. And so I ended up picking up a bunch of skills around accounting. So when we decided to kind of launch, I was sort of like fund accountant number one. But yeah, I mean, I quickly realized that I've got to get somebody who knows what they're doing in here. So, we made a hire, and, since then it's kind of taken off. And that's usually how I do everything. When I start something new, I kind of have the guinea pig, the first person to sit in the chair, figure it out, and then quickly find somebody to backfill myself.
So, anyway, that's impressive. That's so impressive that it's like, learn it fast, find the right people, make it happen. Just the entrepreneur mindset behind, how you did that. But I want to jump forward because you're helping so many people, so many passive investors to find the correct sponsors, or a correct, probably not the correct term, but, just reputable sponsors, right? Trustworthy sponsors. And that's difficult. I hear it all the time. I mean, many investor calls every week. Investors say, well, what is this syndication thing, right? I've never heard of this before. And it just seems so odd that I'm just going to find this team and hand them all this money, right? And so, it's building that level of trust. We've worked very hard at that. But I love to hear, just your thoughts behind that, because I know you're talking to so many limited partners, passive investors who just feel it's so intimidating, right? To get into this space and knowing where to invest, who to invest with. Could you just speak to that?
Yeah, it's another one of those things that's sort of a bit accidental. I mean, for us, spent a lot of time building our own investor base. And so, we had live investor conferences and, I've spent a lot of time speaking with them. But a funny thing sort of started to happen, I guess it's probably about a year and a half ago now, is that I started getting phone calls from people who had invested in clients of ours, right? So they'd call up and say, okay, Lance, you don't know me, but I'm invested with X and Y and Z, and you guys administer these funds. And I like those guys. And I like the fact that there's somebody who's providing some third-party oversight. That's what gives me comfort. So I'm assuming that you have many other clients, since I've already found a way to invest in 3 of yours. Can you send me your client list? So I'm like, well, that's an odd request. And I'm like, I don't know if I can just send you my client list, but what are you looking for, right? And so they'd explain whatever it is that they were looking for, their mandate, multifamily syndicators in the Southeast or whatever. So then I'm like, well, let me just give you some names of people who fit that criteria, right? And then 2 weeks later, same thing happens. Hey, Lance, you don't know who I am. And I'm like, what is going on here? So then I realized, I'm like, okay, I need to dig in more. So I call the other guy back and I'm like, okay, this happened again. I've got all of you guys calling me now. Tell me what you're trying to do. So the basic gist of it was, Lance, we got into this real estate crowdfunding stuff. We realized there's not that many sites, and the deals on the sites go fast, and there are not that many deals. You can go direct to the sponsors. We figured that out, but we don't know how to find them. So we're just trying to. It's just a ton of work to figure out who they are and where they're at. And then I realized, I'm like, okay, that's true. There's no place to go that you could find, there's no one database, right, to go to. And then I said, well, if you could wave your magic wand, what do you wish you could do that you're not doing? And the things that came up consistently were, I really wish I could run background checks on these guys, because I never know if they're crooks or not. I don't know. I don't know them from anyone. And then the other things are like, they all purport to have these gaudy track records, that these things they've done, but I have no idea if they're just making it up or not. I wish there was an easy way for me to verify these track records. And then the last one, of course, is they're like, when it's going well, I'm just assuming that I can't help it, but I'm just paranoid. I think that I've invested in a Ponzi scheme. So the Ponzi scheme language kept coming up also. So there's this pattern of, these are the things that cause us concern and hesitate before we invest. So this is where I realized, like, that makes sense. So this is what stops people from investing quickly, because they don't know the counterparty, and they don't have a great process for determining whether or not they should trust them. So they all, to a person, they said, well, I just use time. I just meet them and I just wait, and I'll look at a few deals, and then some guys are like, I'll wait till the 3rd deal, or I'll wait till the 5th deal. And so I'm just thinking, well, that's completely inefficient. What if we just did those things for you? Would that make it easier? Like, well, yeah, it'd make it way easier. It'd be game changing, because now I know that I can just evaluate the investment on its own merit. Meaning, do I like this property in this submarket? And do I agree with the business plan? Yes or no? And do I think that these guys can execute? The rest of the stuff I don't need to worry about. So that's when we sort of decided to launch that service as an extension of what we were doing, and build the directory. So now you can go to veravest.com and, type in multifamily syndicators in the Southeast, and you basically can find, those who meet that criteria, who've undergone background checks and verified their track record and are being monitored. So
interesting. So what about, outside of Veravest, say the passive investor is listening right now that's trying to figure out those things, right? Trying to build that level of trust with the sponsor. Can you just speak to them a little bit if they don't have someone like yourself on their team, or they're just, maybe they already have a sponsor in mind, but they're trying to figure that out? Any steps that they could go through, or questions they should ask? And, I know we talk about questions asked sponsor often, but I just feel like your level of experience, maybe there's a few things you could provide to that passive investor that's listening that they need to think through before they make that investment with the sponsor.
Yeah, if I didn't have let's say that, I did have access to the Veravest stuff and I didn't feel comfortable with the background check or whatever. I mean, I think my go-to would be to get references. Like what are the other investors that have worked with these people before? And have those conversations. Because what I found when I've called investor references, it ends up, they're not as great or wonderful as one would expect oftentimes because, and investors, I think it's interesting because when it comes to investments, nobody wants to be the guy that said, oh, this is great. And then have it, even whether or not they even know who that person was or not, like they don't want to be the one that said, oh yeah, Whitney's awesome, you should invest with those guys. If he himself is uncertain or doesn't have proof, because he doesn't want to be the guy who then if it blows up, he'd feel guilty. Right. And so I think that a lot of people skip that step because they think that, anytime you get a reference that it's just going to be glowing. And I have not found that to be the case at all. So one thing I'd say to the sponsors, and I tell them this all the time, is that if you've got someone on your investor reference list, you better darn well make sure that those people are going to say wonderful things about you. Right. Like, don't just say, well, yeah, call Jim. I'm confident Jim thinks I walk on water. It's like, Jim probably doesn't think you walk on water. But that would be the big, and then just back channeling stuff. So, I mean, I'd call their property managers. I'd just try to figure out who these people are. I mean, that's at the heart of it, right? It's just, who are they and are they capable to execute the business plan? What, can they execute this strategy? Have they done it before? And of course, that's why I think track record's huge. To the degree that you have one, then that sort of is indicative of performance. It's funny to me that we don't make a bigger deal about it because it sort of demonstrates, and I get it, we've been on a bull run and everyone looked like they knew what they're doing, but it does sort of point to what might happen in the future. I mean, at least with other things going on. So, and then the reporting thing, obviously a big deal too, is just figuring out how often do you report, which those investors could probably give you insight into.
You talked about calling the property management company. I think it's interesting. I think I've had, hundreds and maybe thousands of investor calls over the last, numerous years. And I think I've had one person recently asked to speak to our management company, a potential investor. I thought it was an interesting thing, because then it was like that way they could verify that those properties that we show on our website or whatever are actually under management, and ask some other questions. So I thought that was a neat question that I hadn't received before, but they had a call with them and it was fine. But still, it's just a way, you're getting to know someone right off the bat, brand new, just to ensure, hey, this is real. They are actually managing, or at least another call there, another contact outside of that initial sponsor's organization potentially. But what about, you mentioned reporting. Could you just highlight a few things about reporting that you like to see from a sponsor?
Well, I mean, at this point, it seems that people are really struggling just with frequency and consistency. So I think that just demonstrating that you're at least sending out some sort of narrative report on a quarterly basis, at least, just seems like the bar that you have to be able to cross, right? So I, as an investor, if I'm not seeing evidence that you've been doing that, I mean, I should be able to say to you, Whitney, okay, what deal have you done and it's been on your portfolio for 2 or 3 years? And you say, this property. Then I say, okay, send me the investor communication you sent to all the investors in that deal. And I should have it in my inbox, as far as I'm concerned, in under 20 minutes. Because if it exists, then you should be able to send it over easily, right? And so I think that that's sort of how I would go about it. I mean, what do I really want? I, as an investor, would love to get a capital account statement quarterly. I'd like to know, I mean, I already know how much you gave me in a distribution. So thanks for telling me that you sent me this money. What I'd really like to know is how much income is this property is being allocated to me. How much depreciation would be helpful inside of the year, not after the year's over. And then obviously just the property level financials. I mean, some people don't even provide those. But I mean, I, as an investor, it's kind of important. I'd like to be able to take a look at those things. So those are the things that I look for. And I feel like that's not asking too much, but I've learned otherwise, that I guess that is a tall order, unfortunately.
It's interesting. It's all about who you speak to and what operators. I think there's some people who are sophisticated or experienced as you are that are going to ask for those things and know what they're looking at, where many investors, it almost scares them to see, financials like that. They just don't know where to start. But it's great to have somebody like yourself on their team, that can help them or understand those a little better. And I wanted to speak to the frequency, or you talked about getting those updates to you quickly. I've not seen anyone else do this. Maybe you have. I know we probably a year ago, we started putting all those investor updates on a landing page. And now, immediately I can send investors links to almost all of our projects where they can see every investor update that we've ever sent. So they can go back as far as they want, so easily. So it's neat that you bring that up as well. So we just have a couple minutes left, but I wanted you to speak to this, investors or sponsors that are wanting to work, with institutional money, right? Or they're wanting to, work at that level of investors, or maybe they're not wanting to, continue to have every investor at 50,000. But what does that look like typically for you? And maybe some steps for them to become ready for institutional money?
Yeah, I think it's a lot of what we just talked about, is that institutional investors, their expectation just to survive their due diligence process is that these things will be in some sort of data room that they can look at, right? So if you want to go that route, then you're going to have to be very organized. And now, I think that the downside is that institutional capital really equals expensive capital. So I just have so many sponsors think that that's like graduating to something like and it is in a way. It means that you're mature enough and organized enough to be able to, to attract it, and that your track record is extensive enough to where they're willing to, do business with you. But right, like it's not as wonderful as many people think it is. It's actually they cram you down, and it's kind of like owning a job. So, and obviously it's not completely binary, right? Like it's not, but you need to understand that it's not all that you hope it is, because everyone wants this programmatic capital where it's just instant on capital. Well, that equals, he who has the gold still makes the rules. And that means that don't expect that you're going to, the fees that you've been charging, you probably won't charge. There's always trade-offs. Right. And I think that that's the big thing. And I just think there's not one size fits all is the other side of it. It just, to capitalize transactions is complicated, and each deal stands on its own. And but you need to be ready for it all, because if you do find a deal that needs 20 million in equity and your investor base can't bring all that, then you need to find ways that maybe you can take on, money from equity from a private equity, fund or something, real estate fund. And it just, if you're not buttoned up and you're not organized, then, you won't be able to do that deal. Right.
Yeah. Definitely need some options in this business, or where to find money. Hopefully your investor base as an operator is continually growing. And I was just sharing with someone or another show, he's talking about referrals, and it's incredible to watch that happen. It's our best source of new investors right now, just people sending people our way. So it's just neat to see that happen. But thanks for sharing just some pros and cons really of thinking that or going that direction, right, for institutional money. And so, yeah, some things may have to change if you're planning to use or go that direction to use that type of funds. So Lance, what about, working with all these investors? I ask all operators, and I'd love to hear your opinion on this, because as you're vetting, evaluating so many sponsors, how do you prepare for a downturn? What do you like to see in the sponsors, information or, their investment summary, all these things, you're talking to them. How do you know they're prepared for something like a pandemic?
Yeah, the like a pandemic thing would be tough. It seems that most weren't prepared or not prepared enough. I really think it's just it just comes down to, being disciplined and thoughtful and having a method to your madness. I just think it's thoroughness, right? I don't know if you can be prepared for it, but it's obviously going into the transaction, before you do it, there's inherent risks that exist no matter what. And my podcast is the Real Estate Risk Report. We talk about this all day long, but it really is. You need to think through each risk that does exist and think about how do we mitigate that and how would we react. So from an passive investor, an LP's perspective, I know it's boring to read all of that disclosure material, but you can just hone in on one and go and ask the sponsor, like, what if that did happen? What would you do? Right. And I think that's how you prepare for things, is that you run through and you actually acknowledge that it could happen. I speak with lots of sponsors when especially when I get them on the show, just trying to get them recalibrated to thinking about the risk is kind of odd, because they always they have this tendency to say, well, it's really low risk. It's whatever. They say things like that. And I'm going, okay, but that's the wrong way to look at it.
There's still risk, right?
It's a risk. How do you think you generate 15% IRR, like 10%? It's you take on risk. It's just, that's the name of the game. So I think that's how you prepare for downturns, is acknowledging that a downturn could occur and that this thing's cyclical. And what are we going to do? That might mean just not taking on as much leverage, or, I mean, there's all sorts of things that one would do, but I think that's how you have to approach it.
What about any predictions that you have just in the real estate market over the next 6 to 12 months?
Yeah. I mean, I think it just seems to me that we're becoming a nation of renters. It's just no matter what. I mean, that's just the trend. Just more and more people choosing to rent rather than own. And I don't think it's just sort of a flash in the pan thing. I just think that, I just think that's going to continue to persist, right? It's just build to rent and all those things. You can kind of just see it. It's people would rather just rent something, rather than own it these days. It's just cars and boats and everything that can be, investors own them and other people rent them.
That's a great way to look at it right there. That's so true. So which side of that coin do you want to be on, right? So what about some daily habits that you have, Lance, that you are disciplined about that have helped you achieve success?
Yeah, I mean, I think my big one has just been rising early, right before everybody else. I mean, it's hard. I'm on the West Coast. I've got a lot of East Coast clients. It's hard to beat them up, but but yeah, I get up at 4:30 in the morning, and that's sort of just my way of preparing for the day, and not having a bunch of people emailing me and calling me and family running around and those sorts of things. So I think that's been the number one thing, just to recharge every day, is to kind of get up before everybody else.
I agree completely. Definitely has changed my business completely by being up early and making things happen. What's your best source for meeting new investors right now?
I mean, my best source right now is, I published an ebook, kind of on all this topic, right? Like the definitive guide for, due diligence for passive investors. And it's amazing. We put that out there and run ads on Instagram and Facebook and stuff, but that, people bite on that and they reach out to me like, hey man, I just downloaded the ebook. This is great stuff. And, they got more questions. And so, I mean, I think that notion of like a lead magnet and just having, giving and educating first is huge. And then obviously a podcast just like you. I mean, my podcast is for the passive investors, and just same thing. Like you talk about things that concern those sorts of people, then they find you. So, I mean, I'm not pitching investments or selling it. I'm just trying to educate. I mean, that's nothing new. I mean, a lot of people do that, but I've seen all my clients have been successful using a similar formula. So
what about the number one thing that's contributed to your success?
Yeah, just tenacity, right? Just like, I have grit. Like, I just don't give up. Yeah, I just keep going, and drives my wife crazy, but yeah, I mean, it's just having that kind of mindset, right? Of like, will not be defeated no matter what happens. Just wake up the next day and head down and keep going. It's been hard, right? It's always hard doing great things that, yeah, I mean, it's just, those things are hard, but you got to keep going.
And how do you like to give back?
I mean, I think for me, yeah, the big give back is just always looking to help and coach and provide insight and be real with people. And, one of the things we're working with one of our clients is sort of for multifamily owners, actually. It's called Veritas Impact Partners. And so it's a nonprofit that sort of allows multifamily owners to have sort of social programs like, after school care and access to telemedicine and, just another sort of amenity. I think that's overlooked, because we do see the squeeze, on that kind of forgotten middle, those who are not sort of on welfare or, that are but they're barely above it and just trying to make it happen. Those are the people who occupy many of these apartments that many of your listeners own and operate. Right. And so I'm really getting more involved with them and learning about what they're trying to do. They're doing it in Texas right now. And with my platform, hoping to help kind of spread that and get more operators to realize that they can really help their residents and tenants while also driving more NOI. Like these are the things that create people, cause people to stay in the communities they're in and they don't leave. So that's sort of
that's awesome. What a way to give back, and not just within your own business, but really helping other multifamily operators to give back as well. I love that thought and that design. Lance, amazing show. Just great, understanding the friction between LPs, GPs, how to minimize that, and how you have done that, and how you're helping others, and also just thinking through institutional money and do operators really want to go that route or not? Pros, cons, and maybe we should have some avenues like that if we need it, if it's a big raise potentially. But just thankful for your time and sharing your level of expertise, and also just how you just tackled another business, even starting your own accounting services and bookkeeping. It's impressive to say the least. How can the listeners get in touch with you and learn more about you?
Yeah, you can go to veravest.com or therealestaterinkreport.com. Fastest way to get a hold of me.